pullback. So we want to talk about pullback, pullback, pullback. You've been hearing about pullback in trading. So what is pullback? How many pullback do we have in trading? Okay. How can you know which one to use and the right time to use them? This is what we'll be talking about today. Okay. It is important for me to let you know that for me, based on my experience, we have three categories of pullback. Some people say it's four, but to me, it's three. All right. So we have three categories of pullback. Let me try to pull that out. Number one, we have structural pullback. All right. Structural pullback. Number two, we have pullback to the mean. Pullback to the mean. Number three, we have 50 to 60% pullback. All right. We have structural pullback. We have pullback to the mean. We have 50 to 60 Fibonacci pullback. Let me try to 60 to 50% Fib pullback. All right. So today, because of our time, because our Sunday training is capped between 1 hour to 1 hour 15 minutes. All right. So today, obviously, we can't go into the three, but I'll try as much as possible to cover two. So I'll be covering pullback to the mean and 50 to 60% Fibonacci pullback. Okay, these are the two pullback I'll be sharing with us today. Okay, and the pullback to the mean is a pullback that you can use along with the king strategy. All right. Now, so let's keep moving ahead one after the other. Let's talk about pullback to the mean. Guys, it is important for me to let you know that you need to know, not even important for me to let you know, you need to know that market can never ever continue to go in one direction without a retracement or a pullback. All right. Retracement is what a lot of people call pullback. All right. So a pullback is pullback. So you can call it retracement or a pullback. So market is like it's like human, when we breathe. You will agree with me that when we breathe, it is not possible for a human to keep breathing out without breathing in. So when market is trending in one direction, it means it's breathing out. All right, it means market is breathing out. When market is, for example, market is trending to the downside, it means it is breathing out. So obviously, you know, it is not possible to breathe out forever, right? It is not possible. So we will get to a point that we will breathe in. Once we breathe out to a certain level, we will definitely breathe in just to regain the energy we have poured out. So the same thing goes with the market, guys. The same thing goes with the market. So once market breathes out in a trend, so it will definitely breathe in. So the process of breathing in is known as a pullback. Everybody type in pullback in the chat. Type in pullback. Type in pullback in the chat. So the process of breathing in is known as pullback in the chart. So this is what we'll be talking about. So you need to know that whenever you're trading and market is going in a direction probably in your favor, you should always have it at the back of your mind that this market will definitely stop and pull back by breathing in. All right. So during this process, this is what a lot of people are waiting for. See, pullback is what a lot of people are waiting for. But the only problem majority of people have is that they do not know when the pullback is going to end. That is one of the major problems a lot of people are facing. A lot of people do not know when the pullback is going to end for the trend to continue. All right. They do not know if this is going to stop right here, if this is going to stop right here, or it's going to stop, it's going to move up to this level. That is one of the major challenge a lot of people have. And another thing is that a lot of people cannot recognize pullback and retest. Okay, so I'm going to use this medium to quickly explain something about a retest before we push further about pullback. Now, let me quickly tell you that pullback is different from a retest. You need to know this, guys. Pullback is quite different from a retest. A retest is something, I'm going to show you in a chart that right now, when a support or resistance get broken, a retest is just a minor retracement, just a minor retracement, just like a level get broken and it quickly retested it before it keep moving on. So, but when we talk about pullback is going to be a significant move in the opposite direction. Okay, this is the main direction downward, but pullback like this is going to be in the opposite of this direction. But retest is going to be a short move. Okay, short move like this. Now let's look at this chart. Let me show you where we can find a retest before we go back to the pullback. It is important for you guys to know it. Okay, so when you know the difference between retest and pullback, you will understand how market moves very well. All right, now a retest is when a support or resistance get broken. All right, so when a support or resistance get broken, for that same move to continue, there must be a retest. 80% of the time there will be a retest. So how can we find a retest? You will agree with me that this level is a support, right? Now when I draw this to the future, you will agree with me that this level got broken right around this place. All right, guys, please pay attention to this. I want you guys to understand this. Look at this level got broken with this candle. So a retest is when price quickly return to this level that got broken. You can see the retest happen right here. You can see the level got broken right here. It came down and it went back up quickly under 2 candles or 3 to retest the area that, okay, this was a valid support. So retest that the area that got broken was a valid support area. In this case, this is a support level. So once this place got broken, price came back up to test that area. So in the test is just to confirm to you that the level that got broken was valid. Okay, so a retest is just a small move. All right, why a pullback is a big move like this? All right, between this and this, which one is longer than? Okay, we can say this is A, this is B. Between A and B, which one is longer? From here to this place and from here to this place, which one is longer, guys? So you agree with me that the B level is longer than the A. Okay, so this level right here is considered a pullback. Why this one right here is considered just a retest? All right, I just quickly want to let you understand what a retest is all about. So because we are not here to talk about retest properly, but it's important for you to know, about it. Sorry, guys. So retest is just a small touch, all right, back into the level that got broken. So now let's talk about retest. Let's go back into it. Now let's talk about pullback to the mean. For those of us who studied economics, you will understand what a mean is all about. But I don't want to use too much. I don't want to make it complex. So how can you identify a mean? A mean is by using an indicator known as exponential moving average, or what is it called? Or simple moving average. So you can simply use moving average to determine the mean level. All right. So in this case, let's use uh 50 EMA. 50 EMA, I think I have one already. 50 EMA, you exponential moving average, right, as your mean reversal area. All right, mean reversal area, guys. What do I say? Mean reversal area. You can use 50 exponential moving average. You can use 60 exponential moving average. You can use 100 exponential moving average. Keep noting this down, guys. You can use 120 EMA. You can use 200. All right. You can use 50 EMA. You can use 60 EMA. You can use 100. You can use 120. You can use 200. I hope you guys are following. But in this case now, guys, I will be using 50 EMA. In this case, just to explain this concept to us, guys. But it is important for you to know that sometimes, how will you know if price is going to stop at 50 EMA? How will you know if price is going to react to 50 EMA, or is going to react to 60? These are the challenge a lot of people are facing. Now I'm going to share something with you guys. In this case, you will agree with me that for those of us who have been using indicators to trade, all right, you will agree with me that in the case of 50 EMA, this is we use this for a trend. So whenever price is above this, market is telling us that this is showing to us that this pair is going up. And whenever it is below this 50 EMA, is a confirmation to us that it is going down. I hope you understand. Now, let me bring one more EMA. I think let me bring 120. Okay. 120. I really want you guys to understand this simple concept. It's not so hard. All right. Just a few seconds, guys. Let me try to bring it up. Let's use 120. I want to be able to pinpoint something out for you guys so you can understand how the whole concept works. All right. Now look at this. The red line, the red moving average is 50 EMA, while the blue is 120 EMA. Now look at this. When price was above this EMA, we can consider price is going up. And now when price is below the EMA, the 50 and 120, we can say price is dropping. Fine. Now, this was the first drop, okay, that crossed the EMA. Okay, so the moment this happened, we can say price is going down. Now, right after that, we can see another move. Came back to the to touch the 120 and the 50 EMA. So this is known as the pullback. This is known as the pullback. All right. Now, we cannot confirm that downtrend is already in place. With the break of this EMA, as price is trading under it around this place, we can confirm that price is now ready to go down. But yet, we cannot say price is going down. We cannot say price is going down because price just pulled back to touch this area. This is just one touch. Now, another move we had right after that was a down move. Now, around this place, we can see that price has touched both the 50 EMA and the 120 EMA. Now, the next touch that is going to happen was that price went up to touch 50 EMA, which is this red line. Now, how will you know if price is going to return around this place or if price is going to go up to touch this one? Now, look at this. You want to check previous data. Where is the previous data? The first touch we had right here was exactly on 50 EMA. All right. This touch right here is a confirmation that the next touch that is going to happen is most likely for price to return around that level. Guys, I don't know if I'm communicating with you guys. Let me know in the chat if you're following me. Let me know in the chat. Now, the first touch of the 50 EMA is a confirmation to us that the next touch right here, price is going to respect the 50 EMA. All right. Now, from there, you can see price reverse around that area. It dropped again. This is another clear confirmation that the next touch that is going to happen is going to be on 50 EMA again. It's as simple as that. All right. You can see we have a touch right here on 50 EMA. Price came down, went back up to touch the 50 EMA, and it returned right there. So this is a confirmation that whenever price pull back up, is going to respect the 50 EMA again. Shikena. So you can see price has been respecting the 50 EMA based on 4 hours time frame on AUD. So I am optimistic right now that if price gets to this level, price is going to respect it around this place again. So that is what you want to look out for. So you want to check where price was bouncing off. So you can see price was bouncing before it got to this place. Before price got to this place, it was bouncing up the 50 right here, bounce up the 50 right here. Even though this one is not so clear to you as a beginner, or you are not too familiar with the whole process, even though this one is not so clear to you, you can see this one right here that is very, very clear that price bounced off at 50 EMA level. So this is a confirmation to you that the next one is going to bounce off. Price is going to return from the 50 EMA level. So now what happened? Price returned. All right. So how do you take a trade with this? Once you see that price is bouncing off from a particular EMA, sometimes you may have like 3 EMA or 4 EMA. So you want to check which of the EMA price is bouncing off. If price is bouncing off the 50, just in this case, you will know that the next bounce for price is going to be on 50 EMA, except except price is ready to change direction. If this should bounce off above this level, then it's if if this move that is pushing up right here does not respect the 50 and it bounce off to the 200 and above, then this is telling us that the trend is most likely going to change. That is what you want to look out for. It's telling us that price trend is most likely going to change. But in this case, you can see it's bouncing off. On the next trade, once market opens, you want to start looking for price to return to the downside from this 50 EMA. So how do you take a trade right there? You simply want to look out for a candlestick pattern. It's as simple as that. You simply want to look out for a candlestick pattern. Look at right here, we have bearish candlestick pattern. What happened? Price dropped. Look at it, came back up again, touched the same level. A candlestick pattern, inside bar, price dropped. Right, look at another one right here. Even though this is not a perfect candlestick pattern, but when you go on lower time frame, it will be very, very clear around that level. Now look at this. Okay, inside bar candlestick pattern, price drop, engulfing, bearish engulfing, price drop. So once price come into any of the EMA that it has been respecting, it has respected once or twice, that is where you want to take your trade. You simply want to look out for a candlestick pattern. Then after the close of that candlestick pattern, you take your trade. In this case, you can see after this small red candle, take your trade. Immediately the red candle closed and confirms to you that it is a reversal candlestick pattern, take your trade. Then put your stop loss 5 pips above the high, just 5 pips above the high. Then your first take profit is going to be this low, all right? So in most cases, in this kind of situation, you will get something like 1 to 2, 1 to 3 at times. But the worst case you get is 1 to 2. All right, I hope this is getting clearer, guys. So that is pull back to the mean. Okay, the main thing you want to look out for is that you want to look out for which of the EMA price is respecting. For example, when I go on 1 hour, let me quickly go on 1 hour and show you something, guys. You see that price may likely not, okay. Let me take all these things away so we can see it. Look out. You can see price is woven in between the two EMA. There was no clear touch around here except this one. So you can see with this one, you can see price is respecting the 120 EMA on 1 hour. You can see it's respecting the 120 EMA, respecting the 120 EMA. So in some cases, in some time frame, 50 EMA may be respected, and in some time frame, 100 EMA will be respected. But in the case of 4 hours, in this case, you and I will see clearly that price is respecting 4 hours time frame, or is respecting the 50 EMA on 4 hours time frame. So once you see something like this, you want to trade this chart. You know it is perfect on 4 hours. You want to trade this particular chart on 4 hours to pick your trade because it is showing you a very, very clear touch. All right. And when you see it on 1 hour that is touching clearly, that is touching the 120 or 100 EMA clearly on another one, on another time frame, trade on that time frame. All right, you just want to wait for price to touch that same area again. Then once price touches, wait for that candlestick pattern in that direction, then take your trade. Then post your trade. I hope this is clear. Somebody said no voice. I can't understand. Please, everybody, if you can hear me, let's type in 3 in the chat. Type in 3 in the chat, everybody, please. If you can hear me very well, please type in 3 in the chat. Put in 3 in the chat, guys. If you can hear me very well, I want to be sure we are on the same page. All right, I'm so happy you guys can hear me. All right, so let's keep moving, guys. That is one thing you want to recognize. I will repeat again. In this case, as you can see that price is respecting the 50 EMA on 4 hours on this particular currency pair. You can see that price is respecting the 50 EMA. You want to trade this particular chart with 50 EMA on 4 hours. It's as simple as that. So you move to the one that is very, very clear, obvious. In this case, as we can see, 1 hour, we can see 1 hour is not so clear. You can see price is woven between the 50 and 120 EMA. You can see price is woven. There's no clear touch right here. It's bouncing off and on. You can see the same thing is happening right here. The same thing happened right here. But on 4 hours, it is very, very clear. It is very, very clear on 4 hours that price is bouncing off 50 EMA. So you simply trade this one on 50 EMA with 4 hours candlestick pattern. So you just want to wait for that candlestick pattern to form. It's as simple as that. Then take your trade and enjoy your profits. You see, guys, there are a lot of ways to make money in the forex market. I'm just so surprised why a lot of people are not making money. I'm just so surprised. But I know the reason why a lot of people are not making money is because a lot of people are greedy. There is no best time frame to trade, Kelvin. Depends on what you find in the market and your availability. All right. In this case, based on this strategy, we want to be sure which of the EMA price is respecting. Okay. Let's switch to daily. Let's switch to daily. You can see it is not yet clear on daily. Now look at daily. On the upside, you can see price came down. It went up, broke up, came to touch the 50 EMA. Can you see, guys? So the next move was price went up. The next thing that happened was that price came down to touch the 50 EMA again. So as price is coming down around this level, you are expecting it to return from the 50 EMA. All right? You are expecting it to return from the 50 EMA. Why? Because it has been respected once before. You don't need to respect it twice before you take your decision. Just once is okay. It has respected this once before. You can see. And price got to this place and shoot up again. And the next thing that happened was that you can see we had another candlestick pattern right here that tells us that price is ready to push up, but it failed. Even though it went up a little bit in about, let's say, 75 pips. This is even more. Okay, it went up like this, and the next thing that happened was that market dropped. So even with this, you should have broken even. If you know what you are doing and you know how to trade very well, you shouldn't even lose this trade because it has given you some profit before it returned to breakdown. So now you can see price went up. Price initially respected this with this candlestick pattern, but because price is ready to change direction, it got it broken and now it's on its way down, which is on daily. I hope this is what I'm sharing with you is clear, guys. Type in clear in the chat. Type in clear in the chat. Type in clear in the chat if what I've shared with you is very, very clear to you. Type in clear in the chat. I want to be sure we are on the same page, guys. If what I've shared with you is very, very clear to you, please type in clear in the chat. And if you have any question based on this, please put it in the chat before we move to 50 to 60% Fibonacci pullback. We are 8 on the call, so I expect you guys to type in clear or you put in your question before we move on to the next pullback, because I'm ready to share 2 pullbacks with you guys. So this is a perfect trading strategy for you guys, for those of you who are uh, hungry to take trade. So for the king strategy, guys, for the king strategy, our trend indicator is 120 EMA. In this case, 120 EMA is our trend indicator. So 120 EMA tells us that whenever tells us the trend we are to follow. So for those of you, this is just an additional confirmation to you that whenever you see price is respecting the 120 EMA on your on the time frame you intend to take that trade, then it's telling you that it's a good trade. These are the things I put together to take trade, which some of our students are also using, guys. So for those of you who are new and you're not aware, by 1st of April, we will be putting in a trade signal on our Telegram group. All right. So if you are not on our Telegram group, you want to join it, get your account funded, let's trade live. All right. So we will be dropping trade signal based on the king strategy, and our daily target is 3%. Daily target. So we tend to draw between 3 to 5 quality trades every day, between 3 to 5 quality trades every day. All right. So I hope this is very, very clear and no question to this. All right. So this is known as the mean pullback. The mean pullback is when price pull back into the moving average. All right. So you want to take a trade with the moving average price is respecting. So that is the first thing you want to observe, which one of the moving average price is respecting. So if you see that it's respecting a particular moving average, then you want to start looking out for on that moving average. Okay, so for you to go in, look for a candlestick pattern that tells you that price is going in the same direction. It's going to continue the trend. I hope this is clear, guys. So now the next thing I'm going to be talking about now is 50 to 60 Fibonacci pullback. This is another one, guys. Okay, you see, there are at times you need to put confluence in place. Okay, you need to use confluence before you take some trade. You see, I must say, Forex is very, very simple, and at the same time, it is hard. It may only be hard if you do not learn it the right way. But when you learn it the right way, it is the simplest business ever I've ever seen. Trust me, I'm telling you the truth. It's hard when you do not learn it the right way and you're not doing it the way you are supposed to do it. But when you learn it the right way and you are doing it the way you are supposed to do it, it becomes the simplest business ever. It becomes your ATM machine at any point in time. For us, we can't really recommend brokers, but we use IC markets. We use IC markets, right? We use IC markets. So now let's talk about 50 to 60% pullback. So I've explained a lot about retest. So 50 to 60% pullback. The moment you start seeing a pullback, you want to draw your Fibonacci. Okay, this is the last eye. So as we see that this pullback is happening, we want to draw our Fib. It's as simple as that. Draw your Fib and expect price to come to 50% level. So once price comes into this area, which is 50% level, okay, why this is 61.8. Okay, I said 60% level, 61.8. I beg your pardon, guys. Between 50% level and 61.8. So the moment price come into this, you want to start looking out for your candlestick pattern. So if price is going to respect 50% level, then immediately price touch this area, you will see your candlestick pattern. Then right after the candlestick pattern, take your trade. And if price does not respect that, it's going to pull up to touch the 61.8 Fib level. So this is another way to determine a pullback. Okay, this is a confirmation that this is a strong downtrend. This is a confirmation that this is a strong downtrend on AUD card. So you will agree with me that let's keep using right from here. Look at, we have price came into the 50% level right here. You can see, look at guys. So price came into a 50% level right here, and immediately right after that, we have a reversal candlestick pattern right there. Then the next thing that happened was that price pulled down. Look at this level again, between here and this place. You can see this is exactly at 50% level. You can see, look at guys. I hope I'm communicating, guys. These are the simple things people don't take cognizance of. When you put all these little things into consideration, trust me, you will start making money in forex. But a lot of people are greedy. A lot of people don't want to do it the right way. That is why you can see them losing money. Look at price pull back into 50% level, and right around there, it gave you your reversal candlestick pattern. So the moment price comes into the 50% level, you want to take your trade right after the candlestick pattern. Immediately the candlestick pattern close, take your trade, then put your stop loss either 5 pips above here, or you put it at 61.8 level. Okay, if you have put this one at 61.8 level, you are still safe. But if you put it like 3 or 4 pips, you may probably have been taken out with by this candle. And now another entry happened right here. Look at another entry. Price came down around here and went back up to retest the 50 level again. The next thing that happened was that price dropped yakata. Look at, so 50% level and 61.8% Fibonacci level is another pullback you want to start using. Okay, I hope this is clear. So for you to take a trade, you want price to pull back into 50%. So once it pull back into 50%, you want to start looking out for a trade. If it pull up to 61.8%, then look out for your candlestick pattern. So after the formation of candlestick pattern, that tells you that price is ready to continue its downtrend. Then you take your trade. I hope this is clear, guys. Fibonacci level, how to draw Fib. Let me just clear everything. How to draw Fib is, we have a video on how to draw Fib, guys. Okay, you can go on our YouTube channel, just type in Fibonacci. There's a video where you can learn how to draw Fib, but don't forget to subscribe, all right? But in this case, let me quickly tell you, to draw Fib, we are on downtrend. Just pick your Fib, okay? If you are using MetaTrader 4, just click on your Fib. In this case, price is going down, all right? So you want to start from the last high. This is the last high. This area, you can use this, you can use this. It's the same thing, either this or this. So this is the last high. So you want to draw from the last high because market is going down. So you want to draw it down because it's going down. This is where market the last high. So draw it to the last low. This is the last low. Okay, draw it. So as you draw it, you want to wait for price to come into 50. All right. The reason why we expect price to respect this 50 is because it's falling into a good resistance, a good support, a good support that got broken and now is becoming a resistance. I hope this is clear, guys. I hope this is clear. So you want price to come into this 50% level. So once price touch this level, you want to start looking out for your candlestick pattern. And if it goes up to touch the 61.8% level, look for your candlestick pattern. The moment you see the candlestick pattern, take your sell trade. Okay, once you take your sell trade, your first take profit is going to be this low. So with this low, you are guaranteed to get at least minimum 1 to 2. You can get 1 to 3, 1 to 4, depending on the stop loss. I hope this is clear, guys. So let me know if there's any question in the chat. If there's any question based on this, let me know. So sometimes you may decide to use 50% and also use the Fib. You may use this together. Okay, you can see on 50%, Fibonacci 50% is exactly at the 50 EMA. So this is a confluence. A confluence is when 2 or 3 confirmation tells you the same thing. It is when 2 or more confirmation is telling you the same thing. That's what we call a confluence, guys. So this is a confluence. You can see the 50 EMA is meeting at 50% Fibonacci level. I hope this is clear, guys. So this is a confluence, guys. So when, like I said, when you're trading, when you're looking at a particular chart and that particular currency pair is not respecting any of the moving average, just skip it, look for another one or switch to another time frame. You can start from like 1 hour. If you see that on 1 hour price is not respecting any of the 2 or 3 moving average you have on, switch to 4 hours. Then on 4 hours, you are most likely to see a clearer one. If it is not clear, switch to daily. So there is no way you will not see 1 or 2. So if price is not respecting any of those, leave that particular chart. Go to another currency pair. So before you check 2 or 3, you will see the one that will conform to what you are looking out for, guys. So you want to start using this. It is so simple to make money in Forex. Trust me, I'm telling you this. I've been there, done that. I was in your shoe. For those of you who have not been making money and you're still struggling, I was in that same shoe for 2 years. And I blew a lot of accounts. But glory to God today. But trust me, it is not so hard. Just follow simple process. That is all what you need to become a consistent trader. Of course, Fib can be used on MT4 or mobile MT4. Why not? Of course, it can be used. So if you know how to do that. Okay, so I hope this is very, very clear. So let me know if you have any question in the chat, guys. Let me know if you have any question in the chat. Any question in the chat, let me know, guys. Once again, for those of you who are not on our YouTube channel, make sure you subscribe. That is the link again. Make sure you subscribe. For those of you who are new, go there and rewatch. You'll find 3 days foundation course program right there. Just type in 3 days foundation course. Okay, you will see it there. Start watching it from day 1, day 2. All right, so any question in the chat, guys? What if after plotting the field and the price tends to be above 62.8 Fib ratio, what will be the bias? Of course, it's still downtrend. What you're looking at for sometimes you will see the week. You see, sometimes once price comes into this, let's use this place as an example. Let's use this one as an example. You can see this area. This is a complete 50% level. I want to show you guys something right there. You can see around this place we have a lot of price touch this place a lot. So this is a confirmation that price is ready to change direction. It touch, came back, touch it again. So we have a lot of wick right here. But in the case of your question, if it touches 61.8 and it pull up a little bit, you are still very right. In as much as within that area, you can still find your candlestick pattern. If you pull up to somewhere here, right? Above 61.8, am I correct? So in as much as you see have a candlestick pattern, but you will see that around this area, most of the time, you will only have a wick above the 61.8. You will only have a wick, just like we are having on 50.0. You can see we have a wick just above it. So price is telling us that it's respecting the 50 level. So on 61.8 level, if price is ready to respect that, even if price goes above it, it will only return. Most of the time it will return. You will only see the wick above it. So that means price is respecting 61.8% level. So you want to look for a reversal candlestick pattern that tells you that downtrend is going to continue. All right, but now with this confluence, look at this. You can see Fibonacci is telling us that on 50 level, price respect the same area with 50 EMA. All right, we have 50 level right here. You can see price return right on the same 50 EMA. Look at the same area where we have the EMA. Now with this, now if I should draw this one too, price is most likely going to respect the same area right here. You can see on 50 EMA, 50 EMA is sitting at the same area where we have Fib level, where we have 50 Fib level. You can see. And when we check all these ones behind, the same thing is most likely going to be the issue. Look at. This is just a perfect, in fact, I never even checked this. I just fortunate to have it. I said, okay, this is going to be okay. Look at, on 50% level, we have the EMA also. Guys, I don't know if what I'm sharing with you is getting clearer to you. Look at, all these Fib level are 50% level, and the same area is where we have the 50 EMA. I hope this is clear, guys. So even if price goes up a little bit, you can see price goes up right here a little bit, just with wick, and it's returned. So you are still on 50%. Look at the same thing happen right here. Wick up and it came down. All right. I hope this is very, very clear. So any question in the chat? Any other question in the chat? Let me know quickly, guys. Thank you so much. I appreciate you for that. So sincerely speaking, guys, these are little things, guys, people don't take cognizance of. You see, I feel sad when I see people saying I've blown accounts. I know what it feels when you go out there, work for money, and put it into your trading account. And eventually, under a few months or a few weeks, you blow that account. In this part of the world, for you to even get $100, it's a war. Chocolates of raising $500. And eventually you blow it. But majority of people, they want to be successful and they don't want to pay the price. There is no way you can be successful if you are not ready to pay the price. That is just it. Forget about being successful if you are not ready to pay the price. Either you pay money to attend training or you watch YouTube videos. Okay, by watching YouTube videos, you are going to burn a lot of data. But the only disadvantage on YouTube video is that if you cannot have live answer to it. You cannot have live answer to it. And we have a training whereby a lot of our students, we have a special training that is not published on YouTube that you can learn through the video. And after that, we still have live class with you to clarify a lot of things. So even there are a lot of things on YouTube that people will just do the video and put it there. They are not eating the right thing for people to do. I've watched a lot of videos on YouTube. I say, is this right? But then when I did not know, I was thinking it's right. But it was after I learned it properly and I did a lot of research on my own personal uh, time that I realized that, wow, some of the trainings that you can find on YouTube, let me just say 60% of them, the publishers will just record it and put it there. There are still some hidden things that some people don't share on YouTube, but because they want to grow their channel, they just have to upload. I hope this is clear, guys. Of course, we have more lesson, Kelvin. If you are totally new, just go on our YouTube. We have had 3 days Forex Foundation course. I'm telling you, when you watch this, you're going to be amazed. What you're going to be really amazed. Just watch day 1, day 2, and day 3. And if you're ready to take our advanced course, we are always on ground. We currently have a lot of numbers of people in our advanced class, but that class have closed. So for those who are ready, who are eager to learn and ready to take the bull by the horn, we have a preset of videos of our past class, which is over 20 videos of 2 hours each. So you can imagine such class, each class with 2 hours minimum, and we have over 20 videos where you can learn. So, and aside that, we still have live class with you, 2 or 3 days class to clarify some things that is not clear. And after that, you keep having our mentorship. So it does not stop there. Let's leave that aside. The goal is just for those who are ready to learn. All right. With this information I'm sharing with you, if you have been trading before and you have not been trading, start looking out for this. Use pullback to trade. Look out for a pullback. Uh, Look out for a pullback trade, then start trading. The only thing is that try to recognize your candlestick pattern. That is all. I hope this is very, very clear. All right. Use 50 to 61.8 Fib level. Combine it with EMA. Any of the EMA price is respecting. Take it and start looking out for a trade. Then after a few months, come back and tell me if you are making money or not. If you're not making money, I will tell you you're not doing it right. You see, that is it, guys. When you know, you know. There's no way you cannot make money in the Forex market. All right. This is the perfect strategy I've shared with you. So thank you so much, guys, for having me today. I'm so glad you guys are here. I'm not going to post this video until next week. For those who are thinking they just want to wait for video, it is not all about posting videos. I'm going to post this video very late to those who are waiting for this, because we want you guys to pay price to come on here and learn something new, then start utilizing it. So thank you so much for having me. I still remain your host. My name remains Abolade Adekola. People call me the Kingmaker. So make sure, if you are not on our Telegram group, guys, you have to subscribe. If you are not subscribed to our YouTube channel, subscribe to our YouTube channel and click the bell icon to support us so you can receive notification whenever we upload. So thank you so much for having me, and see more of you guys next week. Bye bye and happy trading week. God bless you.